Welcome everybody. Thanks for jumping on to our weekly call. I hope you've all had a really good weekend. I certainly had. I attended a personal development seminar this weekend. Not many of you know this about me, but I'm really into personal development. I'm really into growth, and I attend a lot of conferences, a lot of personal development seminars, and do a lot of regular personal development. So I always believe it's, if you're not growing, you're dying. So, it's such an important thing for me to really focus on that growth aspect. But I'll cover a bit more of that another time. And, there's some really powerful learnings that I achieved or that I gained this weekend. And it's just amazing, as you attend more and more of these events, every time you attend them at a different mindset, at a different level of being. So I love it. I can talk about it for hours. But we're not here for that today. We're looking at our charts, and we're looking at our results, and we're looking at the updates to the DTB system. So we're going to cover those. And one of the new updates that we have is a new chart template, which you're looking at now. Now, unfortunately, I was stopped out a few minutes ago trading this. I'm still working out the exact nuances of the targets and the stops. Well, I've got the targets, it's just the stops I've got to actually work on. So what I'm going to do is I'm just going to place a limit order on this bar over here. And then we'll go into, actually, you know what? I won't do that yet. Let's just go cover it from the beginning, so we can make sure that we approach it from the outset, and you guys can learn how to set this up yourself. Okay, so first of all, I hope you guys are all on the new assembly. So on Thursday evening, my time, I released a new assembly, and that's just with the little updates to the DTB system. So make sure you're on that. It also includes a chart template, which is this one over here. So jump on, actually, one of the templates I released was a few minutes ago. So even if you got NinjaTrader open right now and you run the script and you select option 2, I think it is. So, going into the script file. So it's a good idea to put the script in your start menu. So if you got it in your start menu, you put it there, and then you right click on it, go more, or depending on what setup you have, but always run it as administrator. Okay, so once you've done that, select your profile that you have your NinjaTrader installed in, and then you can select number 2. So that is going to basically launch NinjaTrader. It's going to not launch NinjaTrader. It's going to update the templates. So do that. That'll be awesome. But what we're going to do today is we're going to build this template up from scratch, just so you know how it actually fits on the page, or how it actually fits on the chart. And then we'll cover into how incredible it actually is. It's such a pity because I literally entered a limit order on this bar earlier, and it was at this very point. But that's okay. Oh, my camera's hiding it. One sec. I had put a limit order over there, and it just stopped me out, but my target was basically there. So the idea behind this was to target, it's a 50-30 bar size, DTB bars. So my target was over there, and I actually had a 50-30, so a 50 stop, 30 target. And what that basically means is that you need a 2-for-1, you need a 2-for-1 profitability thing for this. So for every 2 losing trades, for every one winning trade. Oh crap! Hold on, how much? Hang on. So if you got a 50 stop, you need 2 winning trades to cover 1 losing trade. That's basically what it means. So it's a good little comparison. It's a good little value to have, so your odds on that, so you know what you need to have. So even though it's a 50 and 30 target and stop, because of the commissions, the slippage, and all that crap that comes with it, you'll be in profit if you have 2 winning trades versus 1 losing position. So that's how that works. Okay, so let's cover what happened last week. So last week we had our game plan templates running. And if I look at that, I'll just bring it up over here. Group results, okay. All right, so I ended the week on I actually ended last week on a $3,141 loss. That was running the game plan templates. And what happened last week was we actually had our gold chart. Now, gold really got me last week. So it basically, for 2 days in a row, it actually had hit the strategy stops. So gold dropped 4,500 last week. So out of all the templates, it was the gold that really that brought the results down. So earlier in the week, you'll see that I posted my results for Monday and Tuesday. So they are in there. So Monday it was 500. Monday it was 589 for the day, and then Tuesday it was 725, and then Wednesday and Thursday I posted those after. So those were on the game plan templates. Now, one second, I got to get the stupid music off. There we go. So that was on the game plan templates. Very awesome. I know it wasn't the most successful week on that, but that's how it goes. If you're expecting to win every week, you go get a job and go and get a salary every week. That's all you want to do, right? So obviously we got a business here. We are going to have losing weeks. Some huge investment companies, huge fund managers, they have losing years. So we shouldn't be too discouraged about anything. And we're dealing with the financial markets, right? Anything can happen. There's huge things happening all the time in the markets, and major unpredictabilities. But we still have quite a powerful edge. So that is what we are constantly exploiting. But the important things to always understand is anything can happen, and there's also a random distribution of winners and losers. I mean, that's the fundamentals of trading, right? Okay, so this week I'm gonna create the game plan again. I'm gonna go through a few templates that have been shared, and we're gonna set up that game plan for the week ahead. All right. So we'll move away from that. Now I've put in a new chart template into the workspace. So if you go into your workspaces and go to DTB indicator sample, you will see that there is a gap trader masterclass tab there. But what I'm going to do is I'm actually going to build this up from scratch, and then we'll go into what it actually does. Okay, so I've just opened up a new tab, and I've created a bar size 50-30. So as I discussed, you need 2 winning trades for every losing trade. So basically the idea behind this is, when you get your signals, or when you want to enter a position, you're not just entering a market order. So there's a bit of psychology behind this also. So entering limit orders has got a different neurological power compared to entering market orders. It's just one of those things. Not really covered too much in the journals or in the trading books, but if you're entering positions based on limit orders, you are specifically choosing a price to enter, and it's not based on any emotion like, I have to enter now, or I have to exit now. It's like, no, you're entering at a price where you are comfortable to enter, and you've already got your stops and targets positioned, so you don't have this. You're basically working according to a system. So the most important thing that I've found with trading is that you need to have a system in place. So first of all, you've got to have an edge. Okay, so obviously the DTB system is a huge edge that you guys have access to. And the second is being able to enter positions without fear, without anxiety, and not just jumping into a position, as soon as possible. So the idea behind this specific chart template is to monitor the bar's progression. So I'm just going to, say for example, this bar is is in progress, the bar finishes, you know that all you're going to do is you're going to place a limit order on this bar, and it's going to have a 50 stop and a 30 target, and the target is going to be here. So you're basically going to be setting, you're going to be opening that limit order, and you're going to let the trade run. So just like I did earlier, I put the limit order in place, let the trade run, and I did it over here. So this $254 loss that you're seeing over here was basically me putting a limit order on this bar, okay, with a target on this bar, with a target at the top of the bar, and unfortunately it just stopped out. So that's what happened there. But you know, you're gonna see this happen all the time. You're gonna see the bars forming. This is like it's quite a thick baseline. It's a 30 tick baseline. So if you guys are familiar with the DTB system, you know that I love baseline trading. So if I change this to like a 51, okay, you will see that this is, you know, 50 tick to go to a new baseline, and then the baseline is 1 tick wide. So the baseline will only be 1 tick. It won't be more than that. So as soon as the price comes down and it deviates, it's going to form these baselines. And then if the price goes up 50 ticks, actually 51 ticks in this regard, it's going to form a new baseline and go from there. So that is what we are doing with this. All that we're doing is we're creating a wider baseline, and we're using that baseline as our targets and our stops. Okay, so if you guys want to follow along, that'll be quite awesome. You know, do that, and then we'll see if we can even enter some trades depending on how the market moves in the next few minutes. So the first thing you would do is go into your indicator list after you've made a 50-30. Now, you only need to load about 3 days on this. So especially on a Sunday, you're coming to the beginning of a week, you've got it's a brand new trading week, so you don't have Saturday's data because there's no data on Saturday, but you still need to have some chart data. So going 3 days will at least bring in Friday's data. Okay, so once you've done that, we're going to go to the gap trader, which is this one over here. Okay, let me just see if I've loaded a template here. Okay, I haven't loaded a template there. Okay, so we've got the gap trader on there. Now click on OK. Now what I want you to do now is just increase the size of the gap trader. So you'll see how the second panel that I've done over there, all I've done is I've just dragged the whole panel up. So like this. And then what I'm doing next is I'm clicking on the bars themselves. So if you click on the bars, you'll see like little circles. So click on the little circles and drag this down to this chart. Okay, and then you might see a message like this, which is fine. Just pop that up and you're going to see this. Now it's obviously a bit wonky at the moment. So if you go to your, I think your data series, we might have to go. Let me just see if this can go on the right. Okay, so always have your price on the right like that. So make sure you do that. And then go back into your indicator settings. Okay, and then on the gap trader, you have to go into this part over here. Trying to just find it now. The scale scale justification. So this one over here, make that as left. Okay, so you've got your scale. So the indicator has got a left scale, which is the small numbers, and the right is your data series that has got your price. So once you've got that, your chart should look like this. Now what I've done with the template is I've gone into the indicator settings and I've just removed these divergence lines. Okay, just because they are a little bit busy on the chart. Now, some of you might choose to want to keep these, but try with and try without and see which one actually suits your specific style or what you want to see on the chart. But I'm going to just remove them. So if you go under the divergence section, you'll see it says the brush white. So click on that and just choose a transparent. And that'll just basically hide away those specific, divergences. I could possibly just adjust this indicator slightly to show the divergences on one of the panels instead of both, and that way it'll only be on the price or only on the histogram at the bottom. But I haven't done that yet, so we'll just leave this like this. Okay, so the only other settings that we've done over here is I've chosen the bar colors to be slightly different. So what did I have on the last one? I think I just had forest green. Green is fine, but then on the down bars, I've actually gone for a darker color. And if I'm not mistaken, I think it was brown. So what we're trying to do here, we don't want to have gold bars because they're going to clash with the gap trader indicator. So we're using the brown bars as a nice contrast to what we currently have. And I've left cyan and I've left magenta the same. Okay, so let's have a quick look at this. Now, what you're seeing on the chart here is you're seeing the histogram of the gap trader. Okay, pretty damn good. And you'll see that this is the 0 line. Now, I possibly may add another line to this indicator. So if you want to use the, I don't think you can use a ray over here, but I think if I use a ray, well, that actually, I haven't used a ray for ages, but you can basically pinpoint your 0 line. Now, I think that will stay there. We'll just see up when price moves on, but that's just highlighting your 0 line. So the idea behind the 0 line is when you're entering positions, your strongest bet of entering positions is, long trades when the price is above and short trade when the price is below. So the price here, you're seeing, going over the 0 line and staying above. So that is one of the ways that you can filter out specific decisions of going long or short. So the whole idea behind manual trading. Now, a lot of you guys are scared of manual trading. Not too much in our group, because we've got a few people that really love it and they activate the strategies based on what they're seeing on the charts, which is all great, because they don't want to handle all the entries and stuff. But there's a lot of people that still really fear manual trading. So what we're trying to do with entering manual trades is we're trying to filter out, we're trying to make our decision process as fluid as possible. So we're trying to remove uncertainties. We're trying to remove a lot of things that can be conflicting. So one of the ways we can do that is choosing, okay, we're only going to enter long trades when the price is above a certain level, and we're only going to enter short trades when the price is below a certain level. So that's one way that you can immediately, reduce the stress and the feelings around entering positions. Now, I did enter a long position over there, but that's fine. That was me. I am testing a few things, but that could be something that you could say, well, you know what, I want to be rather a lot safer than sorry. I'm only going to enter long positions when the price is above this 0 line and short positions when it's below. So we'll go into how those positions are, how they come up. Now, we've got the green bars and we've got the brown bars. Now, you'll see as you move back on the chart, these bars are going to go above and below the price historically. So you'll see over here at the moment, they're below. And if you go over here, oh, they're still below. Okay, so very often they're gonna be below, but sometimes you will see if you just monitor the bars over here, you'll see that when they're at the right of the page, they're going to be in a different position. Yeah, that happened over there. So like over here, you see these bars over here, they are below the histogram, but when you go ahead, they kind of are moved. So don't worry about what's happening historically. See, these are a bit above at the moment. These specific ones are above, but when you scroll back a little bit or forward a bit, you'll see they're actually below. So don't worry about what's happening historically on the chart. So we don't care about what happened historically on the chart. You know, we want to focus on the far right of the chart, because on the far right of the chart is where the trading decisions are actually being made. Doesn't matter what an indicator is showing historically, you know, and it's because we're also combining two panels onto one. So it kind of does throw the indicators off with historical values, but we are focusing on the far right of the chart. So looking at this, what we're going to be doing is we're going to be looking at our breakout volume markers, which are there, and we're also looking at the positioning, and we specifically only entering positions, you know, in accordance with the breakout markers being left behind. We can also look at these dots as a way of, you know, determining, okay, well, you know, there's a dot there, so maybe we shouldn't be going along here because it's a good chance the price is going to reverse. So there's a few things that you can filter out with this. And you're also going to see arrows present. Now, the arrows are on the other indicator, actually, so we won't look at that yet. But if you just take a look at this chart and you look at, you know, where price is in relation to the zero line, you will see there's quite a few options or quite a few possibilities to enter positions, you know, when the price moves. So as an example, you know, whenever you're looking to enter a position, always enter it at the beginning of the following of the baseline. So as soon as the price goes up, so like I'm not going to enter any positions on this bar, but as soon as this bar goes up, say for example this bar goes up and goes all the way there, I'm going to put the limit order at the beginning of the bar. So what that'll mean is that the bar has to retrace 30 ticks to go to the beginning of the baseline, and then I've got a 30 tick target up, because very often the price is going to, you know, form this baseline, and it might go for 1 or 2 bars or 3 or 4 sideways like that even. And all we are looking at doing is we are looking at entering a position. So say for example we had an up bar, the price is going to be at this point. All we're doing is we're putting a limit order over there to enter a position with a target, with our target being, you know, the next bar over there. Okay, that's all we're doing. So it's a 50-30, and you know, we're trying to accomplish that. So ideally we want to make sure that we only stopped out when the price has broken to a new baseline. So that's where I got it a little bit wrong earlier. Is I actually, if I put on my data series, now I'm learning with you on this one, okay? So I'm not like, we're going to basically be building this template together as we go to make sure we've got the right stops, the right targets and everything. But ideally what we want to do is we only want to be stopped out if that baseline is broken. So if I could take my ruler tool and I put it over there, which is where my limit order was, and then I measure, it actually helps having this, the crosshair available when you're doing this. So it helps having it like that. Okay, so that's going to be a 73. Okay, that's a little bit outside of our of the comfort zone of, you know, what we need to achieve. So we need to be able to have a much closer stop to accommodate that. So that this might even mean a slight reducing of the bar size or increasing of the bar size or adjusting the baseline width. So, we can definitely look at that, but what we're trying to do is we're trying to just enter positions based on like a predefined set of conditions, and that specifically would be like not entering market orders when the price is high and then stressing out as the price is dropping. Because imagine if you enter at the top of a bar and then it's like, okay, well, the price is coming down. We know there's a good chance of it forming this baseline, but there's also a good chance of it coming down. So we don't want to have a much larger stop. So like that over there is like an 80 stop. So, looking at that, I'm just looking at the bars, and maybe I should do it on a bar that we can actually see, right? That's not hidden behind something else. So what we're trying to do here is let me just go to another bar over here. So we don't want to enter positions. We don't want to enter market positions as the price comes up. We want to have our entries a bit lower so that it can accommodate the movement, but then also the likelihood of a price going back up to complete that baseline. So looking at this, if you entered a market trade over there, your stop would be basically over here. Okay, so that's like an 81 tick move. But if your entry was over here, if your entry was a limit order over there, and you had the exact same stop, which will be there, it's a 49 tick stop, which is where I came up with the 50. So that's why I said a 50. So, entering a 50 stop, but then having because remember we've got our entry order, over here. So, having a stop as being, only a 50 tick stop, which is from there to where the price would go to form a new baseline. And then having our target as, the price coming back up and then retouching the baseline. So it's basically having our, those are our entry parameters, basically. So if I go to the end of the chart, and we're looking at this, now I had done this over here. So I had entered my position. So if I go into my data series and I just make this text and marker, you'll see that I had entered the position over here and it stopped out over there. So we've got to identify, which is the best approach with this. But based on what we are seeing with the bars, and it might just be because we're at the beginning bars of the day, but generally we should see this exact type of situation happening. So we've got to be able to identify a pattern like this where, we have the bars break up and we're identifying where that stop should be. Now, looking at this, what it's telling me, because I can't see any previous baseline, Jay, see this whole section over here leading from the beginning of the day, it is a little bit confusing over here with the bars. But as the day progresses, as these bars start painting and as they start becoming more prevalent, like they will, like this, we are able to, see the bar formations. We're able to see where the last baseline was. I mean, you can quite clearly see, like that is, that's the baseline over there, right? So that's the baseline. And then this will be the baseline too. So looking at this 50-30 bar, we can see across that is the actual baseline. Okay, so I'm gonna play play around with it this week. I had somebody work on this last week for me, just busy testing it out. But, it seems like a really solid approach of, entering positions, having our stops and targets outside. So, again, we're looking at, as the price comes up, forms a new baseline, comes back down, retests the bottom of the baseline. We're basically putting our limit order over there, and we're putting our stop where the price would need to go to form a new baseline. And then we're putting our target over there. So like I said, it's a nice 50-30 to 50-30. So that is how it's, I'm basically positioning this to how I would like to trade it. So basically, as soon as the price goes to a new baseline, that's where we need to be stopped out. So I know there's going to be lots of questions on this. I know we're going to have to fine tune it a bit more, but I think this is going to be a good step closer to, a lot more people having confidence in entering positions. So I'm going to really focus on this week and do some real trading examples of this, and putting together some sort of a document to help or to convey that understanding to you guys. Okay, but apart from this new signal chart that I'm working with, it is pretty self-explanatory. If the bars are below, because these brown bars are the ones that, these brown bars are the ones that are going to be highlighting when the price is below. So, we're going to wait for the price to actually, drop below like that, and then enter the limit orders at the top of that baseline. So, there's a much higher chance of the price going down when the bars are brown than there are of going up. Now, yes, you will be stopped out sometimes, but generally having that type of a setup, especially when you're having a bit of a downtrend, the price is staying below the zero line. You see the zero line over here on this green bar. So we had a bit of upwards trajectory here, but the price broke down to and then all we're doing is we're putting limit orders at the top of where that 30 tick bar would be. It did drop down, so it would have missed that limit order. And then all we're doing is we're moving our limit order. We're moving our limit order from, where we would have put it over here. We would have put it like a limit order over there to catch the next one coming down. It didn't quite come back and retouch it. So then we'll bring it straight back down, put it on a bar like that. And as we can see over there, the price would have come down, came back up, picked up our order when we would have had our 30 tick target, which would have been, over there. And then we can keep doing that as we're working with that. And yes, we will be stopped out sometimes, but we just need to have more winners than, or like a 2-to-1 ratio for winners and losers. And then the important thing about this is you're actually entering your limit orders. You're not entering market orders. It's a whole different approach. And it's always good to do this after a baseline break. So, if you're seeing the price break to a new baseline, put your limit order at the top of that next bar. So you basically want the price to come back up, retest, or confirm that baseline, and then go back down and hit the target. That's what we're trying to do over here. You don't want to be entering multiple trades on these bars, because over here we're basically looking at one entry. And it's the exact same thing over here. We have a baseline break. See, I'll show you a few areas where the stops could happen. It's like you'll have a baseline break. If you put your limit order there, then that one will be stopped out, right? But if you're having this next one over here, you're having a baseline break. It's excuse me. You often have a baseline break like this. You'll have a baseline break. You've got your limit order. You place your limit order. and you're putting it over there. Targeting, stop. Baseline break, you're putting your order at the top of that baseline break, predicting a downwards, baseline. So, this is something maybe you guys can just have a look at during the week and just see how, especially during the US session, you got a lot of these bars forming a lot of the time. And then just try filter out your decision-making process with going long or short, and then using the coloring of the bars. So what I'm trying to do is I'm trying to create a different way of trading this by using limit orders, as opposed to what we've also been using. I mean, what we have been using is absolutely fantastic. I mean, my very first choice of trading ever will be the shadow trading chart. But then I'm entering market orders. I'm not entering too many limit orders. You could incorporate that limit order approach into this also. I mean, this is also extremely simple. Like instead of entering a market order, when the price breaks below baseline like that, say, okay, well, I'm going to sell now because look, the prices are all below the breakout market, so I'm going to sell. But the price can come back and retest. So you could use a similar approach over here. Well, you're saying, okay, well, the price has broken out of the zone, but I'm going to place a limit order on this breakout marker, and then I'm going to have, a 30 tick or this is a 20 range. So I'm going to have a 20 tick target and, like a 40 tick stop type of a thing. So, the exact same approach could be done to this. That was moved the wrong way, damn it. Yeah, so, that type of, so the whole approach with this is thinking more about entering limit orders based on what you're seeing on the chart, instead of just trying to jump into orders. And at least, you're entering one order, it's got its target, it's got its stop, and then that's it. So like an example over here, if I go, we're at the price, we're at this baseline over now. So you can go and do a sell limit over there and say, okay, well, the price has obviously done this a few times now. Come back to this baseline. I've got a 50-30, but I can adjust that as the price enters. So always check which size bar you're working on, and then you can actually adjust and create your own stops and targets. So for those who don't know how to work with the stops and targets, you can just click on the ATM strategy on the right, and then you can go to custom, and then you can, as soon as it comes up, you can say, well, what is the stop loss that I want to have? Okay, so this is a 20 range, so I want to have a 40 stop, and I want to have a 20 target. Now that's probably not the best, because remember, with the 40 stop, you're paying 40 plus commission, and when you're losing, when you have a profitable trade, it's 20 minus commission. So it's actually like 17 ticks profit versus 43 ticks loss. You kind of want to have that, a little bit more in your favor. So by doing this, at least by 23, you are at least covering the slippage or the commissions and stuff that are involved. So it's like a 40 stop, 23 target. And then this will be a lot closer to like a 2-to-1 ratio. And you can go save as a template, and you can call it, 40 stop and underscore 23 target. You can save that. Okay. And then that will be in there. So then whenever you place a limit order, it's automatically going to respect those values. So you don't even have to go and change your stops and your targets, because it's already preset. So that's another decision that you don't have to make when you're entering, manual positions. So a limit order with predefined stops and targets. And if the price moves on from there, don't go and say, oh shit, I'm going to enter sell. I'm going to sell right now. I mean, because the price could come back and retest. But what I would say though is if the price does move away from that, then okay, well, this is not my, I'm going to skip this specific entry. And then you just wait for the next opportunity. So a lot of this could be like a waiting game, a patiently waiting game. We've got a few things over here. I mean, this signal chart to me, like I said earlier, is absolutely phenomenal because it's giving you these breakout markers. I mean, even from the beginning of our trading session today, at 6 p.m., we had, this marker left behind. Price going up, and running in a direction. Now, if you had entered a limit order there, you would have not been filled. Okay, but this is the beginning of the day. It's gonna give you these signals like immediately, and you can run from them. But if you want to approach this as a more conservative way, and you want to approach manual trading with a lot less, with a lot less emotion, entering these limit orders at specific places, whether it's on this chart or any other chart, it's definitely going to make it a lot more comfortable to enter positions instead of entering. The worst thing you can do is enter a position as a market order over there because you can see the price is going down, and then ultimately what happens is you're going to have the price retrace a little bit, which it often does. I mean, this could possibly retrace maybe even to there 30, and then you stopped out, like, oh shit, I stopped out. But if you had entered a limit order, the chance of that happening is a lot less because we already know that because our momentum line is already telling us, hey, this price is very, very, very likely to go down. Okay, so that's what it's telling us. And it's telling us that all the way from up there. So, one of the things I did when I designed these tools, is trying to give you guys a very good indication of what price is likely to do next. It's like foretelling the future. So you'll see over here, the price is making like higher highs. You've got all these arrows. Now, as you know, these arrows are quite fantastic. But as long as that momentum line is staying up, it's staying with the price, it is trading the price. Only when that momentum line shifts its angle. Now remember, this is happening in real time, okay? Happening in real time. So you want to make sure that you're only looking at entering positions on this. You can see how the momentum line is just continually facing down. So this is basically saying, hey, the banks and institutions are sucking people in to go long, but their true intention is that the price is very likely to come down. So again, you can be entering your limit orders based on that. You don't want to be caught out by the price, going up and down. So only really enter when you've got clear indication of a specific direction. And it's the same, with this. Only really enter when you've got a clear indication. So like this over here. So here's a great example of an entry. Okay. So what I'm going to do over here, you'll see there's a break of the momentum line coming. Momentum line. That's the break of the bar coming down. We've got our markers left behind. Okay. So the very best place that you could enter a limit order trade right now using your 50/30 is you can put a limit order over here. Okay, so I'm going to go click on there and you go sell limit at that price. Okay, so all we're expecting now is this price might go down and break to the new baseline, which is over here. So, I mean, there's like I said on previous calls, there's only two things that price can do. It's either going to go form a new baseline or it's going to, return to its previous baseline. Now, we have created a wider baseline over here, but, that is the only thing it can do. So it's either going to hit here, it's either going to hit this value, or it's going to come back over here, which is the top of this one, which is where the candle would need to be, where price would need to be to to enter our position. And it's the same thing when this candle breaks down. It's the exact same thing there. So using these dots on the chart, using these markers on the chart, using the breakout volume markers, you could definitely enter positions with a lot more confidence. And yeah, you might be stopped out a few times in a row, but I would rather be stopped out using a nice confined approach of specifically having your rules set out of when you enter and exit positions. Remember, we are trading against some of the smartest computers. We are trading against very intelligent individuals who have been employed by banks and financial institutions. We're not trading with a bunch of idiots, But some of us think we can just enter positions and, hope for the best. But, every single bank and every single institution, they have got very, very, very specific rules for their traders. So you're gonna have traders. They're not going to just be entering trades randomly, right? They are probably more than likely working with limit orders themselves because they have got specific targets and stops in mind. They've got very specific rules to keep their jobs, first of all, as traders for these institutions. So they can't just randomly enter positions. So don't have the mindset of just randomly entering positions and hoping for the best. Try come down to some sort of a system. Now, this signal chart I'm working with over here, it might be a shit idea. I mean, it might be. Maybe a few months down the line, I'll think, oh crap, that was actually a shit idea. But the main point of this is trying to identify and trying to come up with specific rules of entering positions. And like I said, you might use this rule that I spoke about here on the signal combo, the show me the money. You might even say, hey, you know what? I actually like this idea. And, I'm going to apply this to this chart. So you're going to switch this chart to a 50-30. Let's try that. I mean, this might even be the damn answer, right? So, say for example, that is a 50-30. And I'm just going to put there like 3 days too. Okay. So, by me also talking to you guys about this, by me also just, getting it out of my mind and out in the open, you guys might come up with ideas on how to improve this or come up with a great system of, wow, okay, well, that definitely makes sense. Or come up with some little adjustments that could make it a lot beneficial. Because I mean, I know a lot of people who have got high paying corporate jobs that are very successful people, but they are shit scared of entering manual trades. They only want to have automated. Like, no, I can't trade manually. It's too hard. But Jesus, man, you run a huge team of people and you've got a multi-million-dollar company, but you're too scared to enter a few trades. So I think that a lot of that fear and anxiety is coming from, entering positions randomly instead of having a very specific system in place. So I'm hoping that some of this can, help out. And like I said, maybe this, maybe even taking our obviously because I've adjusted the bar size, we might want to, go into the indicator settings over here on this specific chart. We've got such a robust system over here that, it can accommodate basically every type of trading style that exists. But I think every single style, no matter what you have, should have a predefined set of conditions. I mean, like I said, the banks and institutions are not randomly entering. And if you want to be in the same arena as them, which we are, we don't want to be randomly entering. That's what causes, 99% of people failing, right? And unfortunately, a lot of the companies promoting tools are not really helping people understand that, because they're trying to make it sound like, hey, you can just buy this $80 indicator and you can make $1,000 a day just like that. Just like we do. Every indicator, oh, easy, you can make $1,000. I mean, it's putting forth a thought, and it's putting forth an energy, telling people that trading is just simple, easy. You can just follow the signals, buy and sell, and make $1,000. But what they're not telling people is that the people behind the scenes, the computers behind the scenes, the traders, the bank traders behind the scenes have got very specific systems in place of entering positions. So it's not just randomly, hey, buy indicator, enter a trade when you get a signal. I mean, that's total. It's horrible. It's actually criminal in my thinking. Yeah. So, but like I said, okay. So we're on this chart, right? So going into the indicator settings, because we adjusted the bar size on this specific one, we need to adjust the indicators because the indicator was working on a 2020. So going on this now, we say, okay, well, if 2022 is not going to work anymore. Now we don't want to. We can experiment with different values over here, but a good thing to do is to go back historically on the chart and to see what it looks like. So I'm going to put in a 40 here, just because it's between. It's just between the values, and I want to do the same for the shadow trading. So, so 40 is between 30 and 50. Okay, it's just, so I think that's going to give me a nice rounded out approach. And the way you can see if something is accurate is you can see, okay, well, where has the price struggled in the past? Where has the price failed in the past? Now, I just came up with that value. It made sense to me, but you can very often see historically, okay, well, that the price struggled over there. It didn't really break through over there. It didn't break through over here. It's kind of a struggling over here at the moment, based on what we're seeing over here. But you can quickly judge by just going back on a chart and saying, okay, well, this setting looks like it is showing quite accurate price reversals, based on the support and resistances that this specific indicator provides. And I mean, you only have to go back a little bit to actually see this type of thing, and then okay, well, I've got a good setting. Okay, it's trial and error on this, and we're working with tools that are have got a lot of technology behind them, but they do need to be refined. It's like the automated strategies. I mean, you can't just activate an automated strategy and expect it to be profitable. You have to adjust it according to the market conditions. So that's why the optimizations are so important. So, like, I think over there we actually got the trend following right over there. Now the breakout volume, that's those are incredible. Those templates that I've given are perfect because they still going to analyze the data that's important. So the indicator settings that we've put in here, which is those predefined settings of the volume breakout. These values, they are absolutely phenomenal. Now you might not want to have all of them on your chart. You might decide, I'm only going to have one or two of them and then make decisions based on that. So trying to filter out as much as you can, but still giving you an edge. So yeah, I mean, at the end of the day, I think the main point of this, it's a little bit off what I was intending, but I think the main point of this was just set yourself up some predefined rules for entering positions, and maybe even don't look at this. I mean, maybe this isn't your answer, but I think that, what I've just realized, or not just realized, the most important thing is there are many tools available. Okay, the DTB system has really got a unique combination of tools that are available here, and they're all included, obviously, as you know. So it's a very good idea to combine a few of them because they've got a lot of very, very crucial information behind them. I mean, the Fibonacci levels, we've covered that, on previous calls, but that is one of the absolute foundations of having on a trading chart. So at least one chart, you should know where those levels are. you should know where that huge support levels are, because they are going to, those are the levels that are very important. Now, you might not have it on this chart because it might be a bit busier, but generally, you do need to have it on a specific chart. And I think this show me the money chart is one of those charts where you can have this, the Fibonacci levels on. There's not too much else happening on the chart. It's not too busy, but it's still giving you a very clear indication of what price is likely to do next. And, you just need to make some sensible decisions. I mean, even if you are getting arrows, like, say you're getting a lot of arrows in a specific direction. Okay, so like this, even in situations like this. Now, you're not going to be looking at entering short trades generally in this type of environment, because you got this momentum line is facing down. When the momentum line is facing up, now remember what you're seeing on this bar, okay, this very bar over here is what would happen in real time. It's not repainting, it's not doing shit. It's telling you all the way from here that, hey, this price is very likely to reverse. It looks like we're going up. But even in situations like this, you could enter your limit orders based on what you're doing. So, for example, you can look at this and say, hey, we've got arrows facing down. Our momentum line is facing right up. So, hey, let's use a similar approach. Let's use a limit order approach on this. Okay, the bar is broken down, coming up. Let's enter a limit order over here. And just have our stop, which will be the next, where the price would need to go to the next baseline. Okay, so we're looking at this. We're looking at that value over there. Okay. And then we're looking at our target. So, you could have a fixed approach like that. So it's a good idea to have a stop in mind. It's a very, very, very good idea to have a specific predetermined stop in mind, because as soon as you start moving your stops, you're asking for trouble. Okay, have a stop in mind, but then, why not think about increasing your target? That could be something you could experiment with. And if that becomes a challenge, then, then move it, then don't do that. Just have your very fixed targets and stops. But I can tell you now, when you have a momentum line facing upwards like that, even though you've got multiple arrows, you've got a very high chance of that price going up. So the more times, you can enter positions based on those, it's not a bad idea either. And then obviously you have situations like this. I mean, this is the classic of classic what these banks and institutions do. I mean, they're trying to fill their orders, right? So their true intention is to pull the price down. But what they are going to do is they're going to spike the price up so that they can fuel their positions. Now, this momentum line is giving us it's telling us, okay, hey, look, the momentum line is down. We've got we've got multiple divergences there. For the first time, we've actually got major selling pressure over here. And the true intention is that price is going to go down. And then what happens is our bars go and color. We have some arrows telling us, hey, guess what? There's a good chance price might be reversed. And also, look, we're at a Fibonacci level, so watch out for that. And the same thing over here. You will have situations like this where you'll have arrows. Instead of entering a market order on an arrow like this, and then having you can imagine having, entering a market order there, having a stop. That's like a 48 stop. Why not, instead of entering a market order, see what you're doing, enter a limit order over there instead. You can have a much smaller stop on your actual position. Okay, and I always say, put your stop beyond the box of the arrow. Okay, so wherever the box is of the arrow, that's where your stop should be. And then, you can enter limit orders. I think limit orders are the way to go. Okay, so what else did I want to cover? Okay, yes, so I'm not going to save this, but I'm just going to, I'm going to just open up, so like 6B, there we go. Let's open up 6B on a normal 2020 with 3 days. Okay, price didn't move that much, did it? Okay, so we might have to go more days. So these are more like the exotic instruments, okay? Because they don't move a hell of a lot. I mean, look, we've got 10, 14, 15, 20, 11. So what I've done over here, if I go into the data series and I just add the price markers for beginning of a trading day, okay? So I'm just going to do this, dash dot dot, why not? Let's do that. So this is basically showing you the trading hours or the days. So each one of these lines signifies a new trading day. So the exact same type of thing can be applied over here. Entering positions based on limit orders. Price goes down, enter limit order. Price goes down, enter limit order. But they are, what I'm trying to say over here is that the bars, the DTB bars has been adjusted to be able to accommodate instruments that have got a much smaller range in price. And obviously adjusting the sizes of the bars, like maybe even a 5 will be, a better approach on a small bar. So, why not apply, looking at some of the instruments that move a lot less. I mean, you can still apply the signal chart to this. If I go templates and I go load, and let me just load up this new gap trader one. Oh, we didn't even cover all the indicators on there. But a similar thing there. We've, you can apply that to this one here, where you're only entering short positions when the price is below the zero. You're entering long positions when it's above. I mean, that's all there. That's filtering out your decision-making process quite drastically. But then even if you just load the shadow or the show me the money chart. Okay, so this show me the money chart, which is template number 5. I wish NinjaTrader would put this shit in better order. Show me the money. Okay, load. Okay, it does need a bit more days. So you've got that. Now, even if I change this, this is with everything. That's with the Fibonacci levels and everything. But still, all of these instruments can be traded on the same signal chart, but then you just need to go adjust the settings. So as you can see, because we've got a 5-5 bar, it doesn't help having a 22-22 settings for the shadow trading and the trend following. So if I go back over here and I change this to like a 7 and a 7, I love 7. 7 is the number for completeness. It's got a lot of amazing things in there, but maybe a 10 or a 9 or an 8. You got a 5-5 bar, so maybe even a 5. But the important thing to do is go back and see, okay, has that been effective? Has that actually shown the true trend of price? So like that's the 6B. Now we'll go into some of the other exotic ones, which is like not the YM. Come on, damn it! I don't want to do YM. What about the ZB? So the ZB is another one of those, and we might need to add a bit more data on here. So I used to have a guy that traded these instruments like a lot, this was his thing. The ZB, oh shit, 155 days. Just make it 15. Is fine. just give us a moment to load. Yeah, thanks, Christopher, for your comment in there. I think it's a really awesome. It is a good theory, actually. Yeah. Well, I mean, it's based on rules, right? Set yourself up with rules that can help you enter positions. So there we go. So what it's doing is it doesn't have that huge discrepancy between where the price opened and where the price is. So you're going to see the bars move a lot more fluidly from the beginning of the trade. And even gold, if I go back and I look at our previous template, let's have a look at gold. Okay, here we go. So this will give you a brief idea. So there's a gold 2020. You see how I had at the end of the trading day it created this long bar, and it's got these like step up, and then it catches up with price, and then it runs with price. Now, if I did the same chart, you notice that if I did the exact same chart on gold, okay, so if I went over here and I said, I want to open up a gold chart, and I'm going to make it a 2020. I'll just load 5 days. It's fine. 3. Okay, you're going to see right now that we have got a much smoother transition between trading days. So I'll just add the trading hours break in here again, which is this white one. You can pop it on any of your, any settings. I just want to highlight it. So like there's the break. So you can see how, the day broke, and then, it flows on a lot smoother. So if you look at that compared to, our game plan, it is a bit different, you see? So it's a lot smoother transition. And I did this because obviously some of the instruments that we work with, or that people like working with, do need a much smoother transition. So if I just do one more of these, did we do ZN? I don't know if we did ZN. It's the same type of a thing over there. So if I go, and these move very slowly, okay? But it doesn't mean that you've got no opportunity to trade them. Generally these are not going to be terrible, but like there we go. We've got a much better transition between the trading day end and the new trading day start. You see all the baselines line up nicely. Yeah. And this might even be a much smaller chart. Jesus, I know you're looking at a tiny chart here, but what is the, you've got a smaller, okay, that's a 1-1, okay, that's a bit tight. But even there, you've still got a smoother transition between the trading day. Like if you look at the time, that's the time. At 6 p.m., 6:01, or even before 6:01, you're already able to trade those bars. So the transition before could have been like 30 or 40 minutes because it took a long time to get back to where the price was painting. So yeah, I hope that helps some of you guys who like to trade, these type of instruments. You're going to be able to trade them a lot sooner because of that bar transition. And that's a tiny bar size, right? But as you can see, you're still able to trade that. And all of these things will eventually pick up as things progress. But yeah, they're all tradable instruments. Okay, cool. I think that's all I wanted to cover today. I'm going to work on the game plan with our new templates. I'm going to work on the game plan with our latest, updates of the bars, and with the strategy updates. If I just go into the strategy settings quickly, so one more little thing to cover. So the baseline wick trader. So this is the one I made the most. This is the one I adjusted this week. Now you are going to notice that unique ID that I had put in the previous week, where you can identify the AM trades versus the PM trades. That was making it extremely hard for the brokers to manage positions. So you can imagine, entering positions with a broker, and you say you got up to 10 positions and you want to exit certain ones before other ones. They can't actually manage that effectively. So, so what was happening before is that we had all these different named limit orders submitted, and the brokers were just like taking them as they received them, which is randomly, and they weren't canceling them in the sequence that the strategy required them to be canceled in. So now what's happening now is it's like, okay, here are 10 limit orders. They all got the same name, so they can be canceled whenever you decide to cancel them. And talk about the broker now, right? Because remember, we're working with retail data providers, retail trading platforms. It's not a professional setup, okay? So they're not going to be treating the orders the same way as as a highly professional trading platforms or brokers would be doing. So I had to dumb down the strategy to make it work with the brokers. And it's not the trading platform, because the trading platform can handle all of those extra, names and things, but the brokers themselves receiving the orders obviously can't. So I've dumbed down this a little bit in the sense of just making the order names the same, but still keeping the core functionality of that. Okay, so let's kick ass this week and see how we go. Guys, thank you so much for jumping on the call, and we shall stay up to date. I hope you guys got some value out of this call. And, please let me know if you do. Please experiment with this. I know we didn't cover the end indicator. So what I also did with this, and I might just do it very quickly, actually. So going on to this chart template that we have, I've also got a breakout box. So I've added on the breakout box over here. And I've just made this like a 2, and I made this like a 50, I think, just to highlight the movement. So, breakout boxes are also good. So you can also decide, hey, I'm only going to enter positions after a breakout box. So that's another very, very good filter to have in your trading decision making, like saying, okay, well, I'm only going to enter in the direction that the last breakout box has given me. So after a green breakout box, you're only going to enter long trades. After a pink breakout box, whatever color this is, I'm only going to enter short position. So that is also going to keep you out of, it's also going to filter your decision-making process, because, these bars, these boxes paint after a confirmation of a breakout. Remember, this is a confirmation breakout thing. So what that means is that when the price has broken out of this box that it has drawn, then that box is going to appear. Until then, it's going to stay a gray box. So you see over here, you got these gray boxes. They like congestion zone. So this box is only going to paint at the close of this bar over here. So then you can say, okay, well, I'm only going to enter long positions, and then that will really help you with that setup, because hey, guess what? Long position. Here's the price, limit order long. Last breakout box is green, or the previous one was breakout. I'm doing limit orders. Maybe we're doing this on the far right of the chart. Okay, so you're looking at these, like you're deciding based on these what type of orders you are going to listen to, or you're going to enter, based on the coloring of those breakout boxes. So a very cool thing. And I think that was it's all we added on there. If I go to my indicator list. Oh, I did add the volume analysis, but let's cover that another time. We covered that last week on our call, so been a bit long already. But the candle volume multi, that is giving us 1, 2, 3, 4, 5 minute bar closes, how the price closed and the volume of that. So yeah, there we go. Okay guys, thank you very much. Have an amazing week, and stay up to date. Watch the game plan chat for those who want to trade the automated strategies from the game plan. That's going to be updated in the next hour or so. Okay, guys, thank you and have an excellent week. Thank you. Cheers.